We appreciate everyone attending. We've got some important program information to communicate to our stakeholders. And without any further ado, we're very pleased to be joined by our special guest, Associate Administrator Thomas Kimsey. Administrator Kimsey?
Yes, thanks, Ross. Good morning, everyone. Thank you for being here with us this morning. It's great to be back here at the SBA, back at work, and certainly thank everyone for their patience as we've been enduring during this shutdown. It's really, exciting of what we've got planned today and what we've been doing over the last week. We've had great success on the reopening, and we thank you, the lending partners, for what you've done to support us as we help small businesses deploy capital. With that, I am going to turn it over to Administrator Loeffler. I want to thank her for her leadership and guidance as we've restarted, and just her partnership with all of you on the line here as our stakeholders. We couldn't do what we do without you, and for the record year we had in FY25. Administrator Loeffler, thank you for joining us this morning.
Thank you so much, Thomas. And look, I'm so excited to be here back with all of you. Thank you for bearing with us during a difficult 43-day government shutdown, but we are back. So grateful to all of you for what you've done to keep these deals kind of active and live, and look forward to hearing your feedback. And my mission was to thank all of you and give you an update, but I also want to thank our great capital access team. I mean, they've really, stuck with it in getting things restarted as we get going here. And I'm proud to say that we're already processing $500 million in loans every single day since we've been reopened. This is really an epic effort across the agency. So I want to thank the team too. Look forward to hearing all of your feedback. But as part of my update, I wanted to celebrate with all of you the milestone that you helped us reach. Essentially, a record year in fiscal 2025 could not have been achieved without all of you. And so what does that translate to? 85,000 small business loans for the first time ever, crossing $45 billion in SBA lending. And, that's really something that I pride our agency on doing. We got through the SOP updates, eliminating do what you do and getting back to prudent underwriting with, good guidance, I think, from the agency that came out of your feedback. So if we can keep that feedback loop going, we will continue to refine these programs to grow them. And that's what I'm so excited about. I know that we can grow from that 85,000 / 45 billion level from here. And that's because we have a lot of exciting things on the horizon, not the least of which is the MARC loans, the manufacturer's access to revolving credit. I've been out on the road this week. I was in the Northeast, New England, New Hampshire, Massachusetts, Vermont, talked to a couple manufacturers that are excited about the MARC loan, as well as what is working its way through Congress, and I'm hoping and praying we can get it by the end of the calendar year, which is the Made in America Manufacturing Finance Act, which has passed out of both the small business committees in the House and Senate on a bipartisan basis. I mean, how incredible to have something that is bipartisan. And of course, everyone supports our Main Streets, our lenders, and wants to see this happen. So I'm going to continue to advocate for it to get through, because we know that we have so many industries that are spring-loaded to come back with access to capital that we can provide uniquely through SBA, but also thanks to the Working Families Tax Cut that came through earlier this year. We know that the 100% expensing of capital purchases, of R&D, the 20% pass-through deduction being made permanent. And I know you hear this all the time, that now that they have certainty, we're also hard at work in this agency on deregulation. We know that regulation is a tax on small business, disproportionately on small business. As someone that had small businesses, I understand that. And we want to be part of the solution as we continue to drive down inflation, make affordability the primary achievement of this administration, as we've already cut inflation in half from a 5% run rate over the last 4 years to now 2.5%. So we're going to continue to make sure SBA is playing its role there. But capital access is I think we're just getting started. I'm so proud of the team. I'm so proud to have this community together, and I thank you for what you're doing and making sure that we continue to hear that feedback. I'm just looking at my notes to see if there's anything else I wanted to add, but I'll just close out in saying we intend to work through this backlog extremely quickly, and we're going to finish this year strong. And as we start to go into 2026, you're going to see us focus on some industries that are really important to this reshoring and onshoring effort. It's making sure that we have food security, that we have energy security, that our industries are primed to grow from technology to agriculture. And so we're really going to be talking with y'all about some key industries that we want to support to create that American strength and restoring our supply chains. A small business survey just came out and said many small businesses are still struggling with supply chain issues 5 years after COVID. Well, this is our moment to re-strengthen it with manufacturing, with getting it going. I'm on a national manufacturing tour. I've crossed 42 state lines, walked factory floors, and you cannot believe, I bet you can because you're out there, but the spirit that is in these small manufacturers, as small as 20 to 50 employees that are making major OEM component parts, that are part of our defense industrial complex, that are part of our aerospace and automotive industry, that are reshoring industries we could have never dreamed of. So thank you for making all of this possible. I'm going to turn it back over to Thomas, but I look forward to, I'm going to stay on the call and listen in, and look forward to taking 2026 to new heights. Thank you all. God bless.
No, thank you, Administrator Loeffler. Again, thank you for your leadership and your support. I want to steal a line from Administrator Loeffler and say, you know, here at the SBA, we're punching way above our weight of what we're getting done. You know, as a small agency, we get a tremendous amount done, and we did that in FY25, as the Administrator highlighted. Super proud of the team here, not only at headquarters, but also out in the centers who are, you know, processing the applications. They're getting those done. You know, we've definitely, you know, seen a surge of those. We're working hard, putting that overtime in, getting those done for you in record time, as the Administrator highlighted the amount of volume that we're getting out the door. And we're going to continue to do that to make sure we deploy the capital as needed. So just thank you to my team here, but also a big thank you to those out in the centers that are doing all the work and getting the capital out to the small businesses that are needed. But also just want to, you know, again, highlight, as the Administrator mentioned, the priorities as we move forward into FY26. We do have those strategic priorities that we're going to be leaning into and highlighting those with you, being manufacturing, food supply chain, critical minerals. And then also just from a, some of you have seen some of the modernization things we're doing on technology. We're most excited about that. Some of you probably saw that at Nagel or NADCO. We're continuing to do that. So we're very excited how that's going to improve your lender experience. It's going to be a game changer moving forward. And then we'll have some other highlights into what we'll be doing in FY26. But with that, again, thank you to all of you who made FY25 a huge success. Record numbers. We couldn't have done it without your support. We're here to support you. And I think, as you see, we're very accessible. And if you have questions and comments, the team is open, and we want to answer those and make sure we're continuing to deploy the capital that's much needed in all of America. But with that, I'm going to turn it over to Deputy Administrator, Associate Administrator Diana Seaborn. I just want to give a thank you to Diana. Diana's been very supportive of me, making things run smoothly here. And so Diana, thank you for your support in what you're doing, but I'm going to turn it over to you to cover some of the additional things, highlights.
Hi, folks. Good to be on a call with you. We missed conference this year, and I'm really sorry we weren't able to join you. And either our Nagel folks or our NADCO team and all of those members. I understand both conferences were very robust and well attended. So sorry we missed it. You know, it was my season of fun, so I'll have to pass along my Maleficent ideas as we go through the year. Anyway, I just wanted to take a minute out of this. I know this is a short call, and I am the lobbyist for getting our teams as much resources as they can get in order to work through the backlogs. The systems are working well, and we're pleased that we've had very few, if any, slowdowns, and everything has been addressed within minutes or hours, but we are processing rapidly. I'll let Jehoon cover anything that he needs to about that. I just have a real plea in looking at all of the numbers, the hundreds and hundreds of 504 applications and 7A that the center's processing. The delegated lenders are doing a great job of getting in and getting out, and I don't think we have a lot of concern about the volume that the system can handle. Our servers are in good shape. We have plenty of capacity. But I do want to remind you, and I want to ask you to sit down and speak with your processing and closing teams. Some of the things that take a lot of time, in reviewing and getting these answers back to you that you need desperately, and I know it's getting towards the end of your calendar and fiscal year, is things like the compliance checks. We're getting, obviously the first backlog from those that would have been processed and you had staged, and then those following it. But some of the very simplest things are costing you the most time at the centers and for a delegated lender as well in the compliance checks. Please have your team pay special attention to the accuracy of the information that they're submitting. Aside from affiliation, which we solved for earlier this year, the largest things that hold these loans up for compliance checks are mismatched ID numbers, TIN numbers, social security numbers, and names. There should be no reason that we have an incorrect social security number in the system. And for the modernization, we'll be requiring that it be input not once but twice, and not through a cut and paste, to try and help your team not fat finger, not transpose numbers. But in this time where you want us to spend most of our time approving the loans and getting things to the closing table for you, we are asking that you please take a look at this. I'm asking you guys to talk to your team before they hit the send button, the submit button, confirm from whatever actual sources you get your data from that the information is accurate, that every period or comma is in the name of a business that's going to go through a 4506T, that your tax ID number, your EIN number, and social security numbers, again, this is the single highest thing. Bankruptcies is another one. Identifying these things so that you don't get out of the chute and get stuck here in a compliance check on a loan. You want to spend your time processing through and approving the loans that you can get to the table by the end of this calendar year, and we want to help you do that. We have a team that's on full tilt. We're coming into the holiday season, and so we'll have asking people to to again commit additional time to getting this done, but we need your cooperation desperately to make sure that to the extent the information is put in accurately, it will drop down some of these things on checks and loan mods that are, as vying for space in the backlog. So that's my request. I appreciate your patience, appreciate you staying with us. We've been through these things before, maybe not as long and maybe not as critical in timing with regard to the end of your calendar year and the end of your fiscal years, but please do everything you can to increase and ensure the accuracy of what you submit in this period of time while we're working through the backlog and helping you get these things done before end year. So have a wonderful Thanksgiving and holiday season, and know that we will be working full tilt right through the new year. So thanks for joining, thanks for staying, and I'm going to turn it back over to Ross because he's got some messages from the directors and the departments in CAP Access. Thanks so much.
Thank you, Diana. I think up next we have Jehoon or Dan.
Jehoon first, and then I'm up. Ross, thank you.
All right, thank you. All right, thank you. Thanks for joining us. As you guys are expected, the incoming volume will demand all of our centers a record high at this time. Most of business lines, 7A origination, 504 origination are, at least double, at least in some portions are triple the normal volume that we would see before the shutdown. Administrator and Thomas has graciously to provide a overtime for our team, and we are a full all hand deck and working laser focused on working through the inventory at this time, and we're doing a first in first out process. And although we do have some high priority requests to coming into the center, we're making an exception to that and looking at those to make sure that those loans are funded in a timely manner. But again, we cannot have every loan be for high priority. So when you are asking us to put any application or servicing actions in high priority list, make sure that you're providing justification as to, and also ensure that it is actually high priority. The other item that we will say is that it will take some time before our centers get into a normal operation. As you know, we had a 43 days worth of shutdown and inventories that were backed up. They're all coming in at the same time. So please be patient. Please do not submit the request multiple times. That's just us going through the triage process longer. If you can just hold off on asking for status updates, we will be very transparent, providing updates as they're available. Most importantly, like Diana mentioned, quality is the key. If you could just ensure that you guys are double checking or triple checking the quality and completeness of the application or packages that have been submitted, we will want to eliminate all the screen outs or requests for additional documentation. A screen out means the multiple touches on our end for the same application, and it creates delays on your side for you and the small business concerned. So with that said, I want to thank our team who's been dedicated and volunteered to do overtime to make sure that we go through the backlog process. And we appreciate your assistance in helping us eliminate some of the duplicate works by making sure the quality of the packages are there for us. With that, I'll turn it over to Dan. Appreciate it.
Thank you, June. So it's great to be here with everybody. Appreciate you all taking time out of your day. Obviously, it's great to hear from our administrator, as well as Associate Administrator Thomas Kimsey and Deputy Administrator Diana Seaborn. We did miss our 7A Connect call last month. So with 7A team, the 504 team, we have a couple updates for you all today, especially as you're working on your pipeline, getting ready for the end of the year, and beginning into some of those businesses that are going to be you're going to be working with in the new year. So we did issue a new procedural notice at the end of September. As it was looking like we were preparing for the shutdown, we wanted to make sure that we got news out to you. So you may have seen this notice. We did send it out to our lenders. We did also, our partners in Nagel and NAGCO put it out. But this was really some refinements to our program. And I think as the administrator mentioned at the top of the call, that the feedback we get from lenders is incredibly important. We take the feedback, we take those questions, we take those scenarios, and we want to make sure that our program is working for you, that is working for your borrowers and the communities you serve. So the procedural notice will be on the SBA website today. I'm going to go over a couple of the highlights in here and just their relevance. When it comes to business expansion, we removed the same geographic area requirement. Thinking about that really in the context of manufacturing and our domestic supply chain, a business could be purchasing a new company or expanding their ongoing business operations or going concern. So the geographic markets that they're in is not necessarily the relevant piece, and we wanted to make sure that our lenders had maximum flexibility. Contained within the fee notice for fiscal 26, as well as the procedural notice, was an update to our rules about loans made within 90 days for our working capital pilot and export working capital program. Those have an annual fee structure. I'm going to talk a little bit more about WCP here in a moment. But again, another point of feedback that we got from a lender saying that the 90-day rule was causing the borrower to be charged a regular 7A fee on the package, as well as the annual guarantee fee on the working capital program. that was brought to Administrator Kimsey, and we put that into practice immediately to make that correction, and that's going to help reduce the overall cost of our facilities to the borrowers and make sure that there isn't any duplicate charges in there. Contained in the notice was also an update to kind of collateral and lien recording, basically allowing lenders, it can take some time to get that process. Lenders have the flexibility now. If you're going to sell your loan in a secondary market, you do so. You still have to make sure that you get the lien. You are responsible for securing proper lien on the collateral as that loan's being sold. But we wanted to make sure that you had the freedom to manage any delays that you might encounter during the recording process. For business valuation related to ESOPs, when an ESOP, when a business is converted into an ESOP, there's a valuation that's a risk of compliance. We thought it was duplicative to also have another business valuation. All that did was add additional cost for the borrower. So we, again, responding to feedback that we get from our lenders, we made that removal. And then this was a clarification for Mark. Obviously, we're excited about this program. I have a couple slides on that as we go. But the Mark, we did reference that same institution debt is still subject to going under GP. So that was it was implied within the rules for Mark. It was in the SOP. We wanted to make sure that lenders knew that. One of the early Mark loans that is in process involved some same institution debt that had to go in through GP. We just wanted to make sure that was incredibly clear because we do have a lot of people excited about the program. Regarding 504, the inclusion of franchise fees and an update to the contingency fund, moving that from 10 to 15%. Again, another response to feedback that we receive from industry. So again, this procedural notice, if you haven't seen it already, will be on the SBA website. We did send it out at the end of the year. Again, wanting to make sure that was in your hands in the event of a shutdown. Do have want to give an update on Mark, where we stand for those, since this is a new focus of ours, I think it's an important tool within our suite of working capital programs. So again, first dedicated delivery method for manufacturers, any NAICS codes, 31, 32, 33, up to $5 million. The program is live now and have several transactions that have already been approved by lenders and are in process. So it's ready coming out of the gate with some real strong interest. It is focused on working capital. The loan can revolve for 10 years, can have a maximum term out of 10 years, and a lender can issue it as a term loan right out of the gate. The collateral on this, all assets of the business. It does have some flexibility in underwriting related to debt service coverage. And again, information on the Mark, our training on demand page, we did a deep dive into the program in September. That's now been published. Importantly, I think it's helpful to think about where the Mark fits within our suite of working capital programs, and really it can bridge a lot of the programs, and I think that's an incredibly strong component of it. So from open revolving lines for those businesses that might need a slightly larger version of an express, all the way through project and borrowing-based driven facilities that are more associated with the cap line, the working capital pilot, or the EWCP. So more information there. Regarding the working capital pilot, was introduced last year, had its first full year. And all of these programs, whether it's the Mark, which is obviously focused on manufacturers, or the WCP or some of the other products, I think are incredibly important tools for helping support your manufacturing clients, supporting the domestic supply chain. At the end of its first year of operation, the WCP is already at $153 million in the portfolio. There are 73 lenders active with the product. Of the industries that are using the program, manufacturers are the largest with 27% of the portfolio, followed by construction and wholesale trade. So whether it's manufacturing, the domestic supply chain, the food supply chain that both Administrator Loeffler and Associate Administrator Kimsey referenced, I think this is an important tool. And ultimately, it's really there to help complement your core 7A and commercial offerings. We do have an update to the program guide, which is on track for publication next month. So keep an eye out for that. And ultimately, we think that is another tool that, pairing with Mark, the Capline Program Express, really gives our lenders an opportunity to build out the revolving credit suite within their institution and complement their core 7A and 504 lending practices. Finally, as we wrap up, the Connect calls. So we have our 7A Connect. The invitations for this are going to go out, 7A Connect, 504 Connect. We're also introducing the SBA Connect quarterly update. This is really going to be a new call that's focused on transaction structure and credit. So if you're in more of the SBA shop, this could be a place for the lenders who work with the SBA programs, but not exclusively. Maybe they're not in the operational area. This is really going to be focused on best practices, how to deploy the products. There'll be heavy focus on working capital, a lot of updates from Mark, the WCP cap line, as well as just best practices from industry. So that is a new call we're launching in 2026. Excited to get that out there. The first one will be in February. So keep an eye out for that. And again, with that, really just appreciate you all taking time out of your day. It's great to be back, and we look forward to a very successful 2026. Thank you all. you.